Today I'm going to show you when you should trade dilution and when you should wait. So, dilution occurs when a company sells or issues new shares into the secondary market. When they issue new shares into the secondary market, they become tradable and it increases the public float. When this is done, logically speaking, you will have, as an example, if a firm issues 10 million shares and they become tradable, they're issued, they're active or exercised in case of warrants, exercised for common stock, they become common stock. Then, let's say your initial public float was 10 million and you have another 10 million added. You will have 20 million shares that can be bought, sold, and traded in the market compared to initial 10 million. If you have more, logically speaking, if you have more supply, your supply increase from 10 to 20 million, you will have less demand, right? So in the long term, dilution will always price in, and you have to calculate and estimate when that will happen and understand why sometimes, even though you have these toxic terms, you have huge dilution, stock price still goes up so much. That's what you have to understand. And today I want to show you how you can try to understand which dilutive instruments and offerings are going to push price down and which ones aren't. In the long term, they're always going to push price down unless those are positive offerings, right? You have to identify toxic offering. Usually a company with no revenue, no growth, no profit, nothing to show for their offerings, you would consider that a toxic offering. Also, you have to look at terms. Usually offerings can either be at the market, which there you don't really have any terms to look at, but when you look at convertible debt and warrants, you have to look at the exercise prices and what the company sets. So a lot of warrants for toxic dilutive instruments will be set way under the current price, as well as public offerings. And this means that, for example, in the case of warrants, recently there was a company that said that it was trading at 30 cents and they set warrants, a lot of warrants at 0.06, which I think is BGM, and we will look at it. Setting warrants at such a discount is a toxic dilutive instrument. You have investors who can exercise those warrants at any point, and they will massively profit from selling those warrants anywhere above their exercise price. So you have to look at the terms. If the exercise price of convertible notes and warrants is much below the current price, that is very toxic. Because sometimes those companies, they don't have any money and they need to sustain their operations, and they're just pump and dump schemes, so they will give investors such favorable deals, right? And usually that's how you determine which companies are more toxic and which companies offer more toxic deals than the ones who are actually diluting, but they fall into a different category. So we're going to look at Olux. As you can see, Olux had good news, which is always something I look out for. Good news. You have good news and then you have an offering, right? It can be one of two things. Good news and an offering into strength, it can still push price up because it can still be seem very like positive, right? In this case, you have a very large offering and the news, they weren't so good. So and as you can see, something very important to look at is volume, right? You can look at, I look at this, I also look at my own dashboard where I look at shares traded every day, average share traded, all of that. But if you look at volume, you can really tell what are momentum moves. So these are news, momentum, algos, they retail, they drop in, they buy the stock, they pump it up. What I like to see is I like to see volume dying down. So as you can see, I entered Olux around here, which is 9th of June. Why? Because I'm expecting no positive news for the company, and I'm expecting to be short for a couple of days until this dilution prices in. There is no one trading the stock right now. Very little volume. All that's happening can either be the regular volume they had before, or you might also have those investors selling their shares or shorting the market depending on the exercise price of the. In this case, they acquired a company for 14 million and they issued, I think they issued a very very large amount of warrants, um, way more than their public float because they just had a reverse split. And they issued pre-funded warrants. So pre-funded warrants are exercisable at 0.01 cents or like a penny, less than a penny, and they can be exercised, of course, depending on the terms, but in this case, they can be exercised immediately. So, what is the point for investors to hold on to them unless they're waiting for price to go up and they want to profit then? But it's very likely, logically speaking, those investors are selling little by little by little. They're putting those shares in the market and selling them. So, that creates an overhang, that creates a selling pressure. If they for example, not asks, but I mean, if they put bids on the market, uh, you're gonna have way more um, sell orders than buy orders, and that's over time that's gonna create or pressure price to push down to a level where supply meets demand, right? So something very important is to make sure you don't have any momentum and any volume or like very small volume in the market, because in that case you will not be stopped out. You don't have momentum traders dropping in, and when you see those momentum people and that volume going up because of any type of news, SEC, that's why you need to keep a track. You can use my software smallcapdilution.com to keep a track on everything that's happening with the company. It helps me find these types of investments and then also keep a track to make sure I know when momentum is starting to push up, so then I close my position. So the goal is to show you when dilution can is toxic, not toxic, and even if they have very similar terms, right? So let's go now to, for example, BGM. So just to look quickly at BGM. Okay, so they have a massive private placement issued. This is the one I was talking about. 200 million shares at 6 cents. Their float is very, very little. There you go. I have it here. So they issued 200 million shares. So I tried to short this one. As you see, um, it came out on June 8th. I'm not sure what time, but volume wasn't picking up. But as you can see now, volume picked up a lot, like 100 times more volume than average volume. So I just decided to go out. This is one of those toxic offerings, and I shouldn't have gotten this trade, but I was expecting it to not do this because I was looking at past action. But this is the toxic offering. They have so much shares that are currently being exercised. They increased the public float by so much, and those investors, they know this is a shit company that has no potential, nothing, no revenue. It's just bullshit. It's a bullshit Chinese or Hong Kong company, and those investors, they own 200 million shares. They just want to get rid of them. There's no point for them to hold on to those shares. They gave the company the company is asking 12 million, and in return the investors get 200 million shares, and the 12 million, those shares, they're priced at 0.06, which is here. So they have a massive discount. And you might be at, why do they have such a massive discount? It's because this is a shit stock, and it's hard for them to sell those shares, right? Volume is very low. I think they trade like 300,000 shares a day on average. So it's very low, and it's very hard to get rid of those shares. So how can people get rid of shares? Of course, you can slowly drain them at a very slow pace with no volume. But what you have to do as those investors who bought those 200 million shares, you want people to buy the stock. If people buy the stock, you can sell your shares against their asking. So if they're asking for stock, you will give them the stock. You will happily give them the stock. So you need volume, you need momentum. And a lot of these times they use private trading groups or pump groups where they spam the ticker, they get people to buy it. And then when also retail traders, when they see that the stock is up 20%, they buy it, and that's when these people sell. And you can see that using level 2, level 3 market data, you can very, very easily see those patterns, something that would look very, such as algorithmic trading, or like the ATM agent selling the shares, as well as different investors and people who are getting in those movements, right? So that's how you can see what is a toxic offering from a. They're both toxic, but you can see kind of when to trade dilution and when not to trade dilution. Because if you would short like I did, I don't know, I felt like it wasn't going to happen because I didn't see volume going up, and I was seeing price going down, but I was wrong. Only took a day and then it pumped up like 100% on 1 hourly candle, right? So now I see volume up. I'm not going to trade the stock because it's too shit of a stock to trade. So I prefer trading something like Aldox, which is not as bad. They still have something more to show for it, right? So I believe it will be way cleaner price action. And another stock that I wanted to show you was TDIC. And I don't only short stocks, I also long stocks. So this one, I saw momentum piling up and I knew what was gonna happen, right? It's the same exact thing as BGM, right? And so I longed the stock, but I put my stop loss just above this candlestick, and I would have made a lot of money, right? So I got in at this candlestick around here because I knew BGM. Let me just make sure, not BGM, TDIC. They have 13 million warrants. I'm not sure about their float. It doesn't really matter. Their float is very low. And they also have reverse split news. I think they come out around this time. So I saw momentum piling up. A lot of times stocks pump on reverse split news. And also they have 13 million shares. So they want to get rid of them. So I knew the move was not going to end here. But I wasn't too sure because usually I would expect more. So if we go back to BGM, this is something really important, is that for me, right now, it would make no sense that there would not be another pump. They have 200 million shares right now and warrants in 90 days. 200 million shares. That must have another pump because they cannot sell 200 million shares in this 1 hour candle. It's impossible. So I am expecting a way larger pump coming soon for BGM, but sometimes I do trade it, sometimes I don't. Very recently, I've been trying to just go for for trades that I'm very sure in. So for shorts where I know there's no upcoming catalysts, so I will just quickly show you. For example, I use my thing that I made by myself to see upcoming catalysts, positive and set catalysts. For example, there's nothing for Olox. So if we go for CTX, that is also a stock I'm currently in. There's a reverse split, which is another one actually. That's interesting. But yeah, so basically, basically I look at the future catalyst to make sure there's no date set up for any type of thing that could impact the stock. Of course, you don't know what's going to happen. Sometimes they come up with news out of a sudden and you have no possibility of knowing that. So how you can protect yourself if you are shorting is by not being in a trade for too long. That's the only way. The only way is you don't be in a trade for too long. Make sure you have our small cap dilution premium subscription, so you can look at dilution offerings. You can use basically everything, right? You have live dilution. You see if anything happens to the stock, if there's any dilutive instrument coming out, and also you check when filings come out. You check the news, and you make sure you stay ahead of everything. Another thing you can have, which is too expensive, even I don't pay for it. It costs, I think, 2,000 to 3,000 a month as an API with level 3 data, and then you can very easily have a detector which detects large orders being filled, large orders being placed that are not spoofs. So you kind of make a system that detects when orders are spoofed and where they are. And so you look at the stock, for example. You check in the past. Has there been order spoofing? No. So when you see large buy orders being placed at certain levels for these small stocks, just being placed, not even filled, you know when to protect yourself, because you don't need anything. A small order can literally liquidate you. So that's not liquidate you, but make you hit your stop loss. So that's something you have to be very careful of. You need to look for names that don't have these kind of overnight gappers, that and there's no positive news coming up. So yeah, so I think that's basically it. It's dangerous to trade these stocks, but the more you learn, there's so much things to learn here, so many kind of risk management tools that you can implement to make sure you only take the best trades. So yeah, and if you want, there is my website. You can ask in the comments. I can give you a code where you can have 1 month free, but for now we are giving Catalyst for free. So you can see, for example, tomorrow there's a reverse split for IFA. Then this is all dilution. For example, we also have clinical events happening. So tomorrow there will be a virtual key something. You can also find it probably in other third party like or other softwares if you only trade biotech, but I don't see how you can positively trade biotech, because it's like a 50-50 chance. You're gonna buy before the event happens, and you pray that it goes well or that it goes bad. For example, today, that's like complete gambling in my opinion, if you don't have a system. Because today, for example, I saw one stock. I think it's actually this one. I have a short or a sell order placed, but actually this stock here, I think on the 2nd of June, I'm not sure, but recently they had a positive trial. So positive phase 1 trial news came out, stock plummeted 30% as soon as it came out with positive news because of dilution. So they had dilution. I can quickly check what they had. Let's see. No, that's the wrong one. So public offering at $4 per share. That's today. So they're pricing their stock at $4, which should make or push price down to 4. That's a discount. Then another thing they had was maybe this 8K. That's the positive. I think it's this. Yes. This is very good. 50. Wait. They have 50 million common warrants exercised. Wait. So yeah, this basically states that 50 million common warrants have been exercised as of June 9th. So that also creates very, very big dilution overhang, because you don't know if they were sold, and they probably weren't sold before. It doesn't say what dates, but yeah, if they were exercised. Wait, does it say as of June 9th? Or okay, that's, but yeah, basically they had this positive trial, and okay, yes, there you go. So that it had received to exercise approximately the March the company anticipates. Okay, there you go. So there's another 45 million of warrants that have been exercised now. It's a bit complicated, but it says that they received a notice to exercise. So the investors told the company they want to exercise their warrants. So after this filing, so it's basically on the same day, I think we can assume that they were exercised on the 9th of June. This is the drop I was talking about, not that one. This is the one with the clinical trial. So yes, that's a 37% drop because of dilution. So most likely, this is actually most likely those 50 million warrants. I haven't checked level 3 data, but I might check if I'm more interested in it. Those 50 million warrants or 45 million warrants that the investors asked to exercise, they were probably giving on the 9th or maybe on the 8th actually. And it only makes sense that as soon as the trial came out, or they sold against the buying pressure. So yeah, this is it for today. This is short, not short, pretty long video explaining when you should and when you shouldn't trade dilution. Look at volume, look at toxic offerings, look at companies past, and then you can kind of see and you can estimate when the dilution is actually going to get priced in, and that's when you should invest. So thank you and see you next time.